All right. Hey, how's it going, everyone? This is Coach JR, and today I just want to go over Tesla and show you how it's more than a showcase of the product itself, but it's just how I take the tools from Hawkeye and follow the volume. That's all you need. So volume, we have a couple entries that matter the most. October 25, then you have November 1, and now we have volume coming on November. Now, pay attention because this is key. You have also volume yesterday, November 18. The only difference on that particular volume is that you look at heat map, this is heat map. Okay, let me see if I open everything here. You have heat map. This is my momentum tool from Hawkeye. Now look at how matches the sell. We have the stop here. I'll show you why in a moment. And when you look at the buying volume, it doesn't match the momentum. So you may say that this is a risky buy. Okay, now Roadkill had a last signal over there. That signal yielded some points. That was very good. But if I look at the previous signals, you have the one on October 12th. Even if you were to buy sometime on October 18, 6 days after the signals, you still have a decent return, about 47%. How do you get those signals? How do you get those entries to have the confidence on clicking? Yeah, you just have to have the confidence. How do you get that confidence to buy Tesla at that particular time? Well, you need to have the tools. It's visual right there. October 12th, even if you buy later, let's say we buy on, October 18th, still a 42.40%. Just on cash, buying the stock. Not a big deal, all right? Let me just double check because Randy told me to make sure I have my inputs. So this is daily. He wanted to have 60. He wanted me to have, I think, 2 days. That would be 2D. Also just showing you how it's the configuration. There you go. Perfect. I think he's going to like this more. So I have the configuration according to Randy. Now let's add to our chart the Hawkeye trend plus stops. All right. There you go. Beautiful. All right. So what is the deal with this? Let me remove all drawings. Look at the idea is you need to have some guidance. For example, you have pullback. This is the pullback. So what kind of confidence are you going to have if you don't have tools that guides you, all right? So with this, on the second level, you have a strong buy. This is your strong opportunity. The question will be, if you're doing this for a living, okay, where do I place my stop, coach? All right, well, you take long position. If you're buying this deep, the easiest way is just to follow the levels, the shaded area, and that will give you a 3% stop loss. Look at what kind of confidence, the confidence you're going to build when you're following Hawkeye trend plus stops. It's a 3% stop loss, and then everyone will be like, oh my God, that's very tight. Look, it's not about having tight stops or long, wide stops. It's about understanding what is optimal. That is what you need to know. This is optimal. Optimal. All right, horrible letter. But the point is, right there, using Hawkeye trend plus stops, you do know you have a map, and that's what you need. If you're new to trading, you need this tool because it helps you to have a visual of what is happening. So right there, that's a perfect trade. Now, you absolutely can say, well, I will feel confident to have enough room. That will at least follow using these tools. Then you probably don't want to get more than 5%. So that's a 5% initially, and you have plenty room to the upside, plenty of room to the upside, all the way to take a risk reward ratio of 1 to 3.90. You're risking $1 at a time back in September to take home at least, that's almost $4. That's a lot of money. But if you were to just stay on the trend, you have another pullback right there, 854, you see all the way up, you take home 67%. That's 1 to 12 risk reward ratio on Tesla. That's right, on Tesla, but only if you have the tools. That's the whole thing. Now, what's happening? Where are we now? So that we took the trade. Probably have the breakout. This is where you probably exit. Some people will take the 1,200 level because that's the round figure. Congratulations if you did. If you don't, you exit thanks to the breakdown on the Hawkeye trend plus stop. What do we do now? That's the question. What do we do now? On the daily, I can tell you we have volume. I don't have momentum supporting the entry. I don't have anything else from roadkill. I had back on, take a look here, $714 per share, August 30. Then I have roadkill again, September 13. I have one more time, September 24. And the final entry on roadkill, that's October 12th. I have nothing so far. I will be in waiting mode. I can always play the risk. So if I were, for example, to come to the 4-hour chart, oh, right there. Look at what's happening now. We had volume picking up. Let's see if we can have it. Look at the volume there. You have roadkill, but still you don't have momentum. Heat map is not supporting the entry. Nevertheless, look at the last bar. That's dark red. Can you see that? Let me just point to that particular one. That's dark red. And you're wondering now, what does that mean? Simple. It means that the bearish trend, it's fading. It's coming to an end. It doesn't mean it's ending. It's coming to an end. So it might move a little bit more. Additionally, look at what happened. Just right there, red dots. The trend is bearish, at least in the short term. And then, boom, right there. Hawkeye Trends Plus Stop is saying, hey, it's time to jump in. Now, the 4-hour doesn't tell me much yet. And if you look at, oh, now it's beautiful. Now it's totally beautiful. Look at this. Now, we may want to enter this play. And today, remember, I'm here to help you, to guide you. So I'm not just going to tease you into acquiring the tools, but I'm also going to give you something to work with. 2 ideas for the next 2 weeks on Tesla, all right? And we're going to play options. So far in the short term, the view is totally different. In the short term, I have volume price deep. If it dips to 1,050, again, 1,050, I am looking to be a buyer. Momentum green. We have volume. We have volume there. Right there, we have volume. And of course, the trend, it's our friend. We want to jump in at least on the 2-hour chart. Now, what do we do with this information? If the trend is up, in the next 2 weeks, I want to start playing potential upsides, continuation of the trend. Understanding at all time that it may drop back to $1,050 per share. That's not a surprise. So this is exactly what I'm about to do. First, I'm going to go to the option chain using quote media just to give you some ideas, okay? And now I'm going to look for next week, the 26th. At Tesla, we have to see, sometimes we have to pay between $3 to $5 per premium. So if that's doing well this week and it continues into next week, I will say, that's very expensive, look at that. I will say we should be paying at least, and I will use open interest to guide myself. I want to take, let's see what else we have. This is very difficult to take. Okay, I'm gonna play this, and I'm gonna take the 1,300 for next week. Opening today, when the market opens, I'm gonna take this one. I'm following. Volume. Look at that. What happened yesterday? 3,683 contracts, and the open interest is 5,119 contracts. Not bad, not bad. Yesterday went down 24%. Today, the pre-market will be, our team is going to make sure to share this information with you all right away. And Tesla pre-market today, it's $1,099. Very shy, plus 0.24%. Yesterday, it did very good. But if we have continuation of the trend based on the short-term momentum, why not closing all the way up to 1,200? Now, remember, with one of the myths with options is that you say, well, it has to be before the expiration date. It has to be at 1,300 or above the strike price. Not at all, but it just have to move as fast as it can. That means very fast, especially because we're trading a weekly expiration. Nevertheless, you have an opportunity. The trend is up in the short term. On daily, things are a little bit different, but it's a guidance, all right? It's a guidance. Now, volume was very, it's not unusual because it's under the open interest, but at the same time, there is interest. There's interest on the weekly, and I'm only going to pay, remember, just pay close, don't pay more than $280 for this contract. I repeat, don't pay no more than $280 per contract. And that means that you're going to pay $280 per contract just to play Tesla. Right now, Tesla is selling for $1,099 rather than take almost $1,200 from your pocket. You're just going to take $280. So, for example, what I will do, rather than buy one share, what I will do is I will buy 4 contracts of Tesla. Okay, 4 contracts of Tesla. I will pay $560. I will be paying close to $1,120, for example. Okay, what I want to do is this. This money would allow me to control 4 contracts. 4 contracts, that is 400 shares. 400 shares of Tesla. That's what it is. And guess what? If you were to buy 400 shares of Tesla, let's take a look how much money you need. Just to remember why we trade options. So it's 1,000. Okay, again, 1,000. All right, let me go back. Oh, Jesus. There you go. Well, can't have it. Let's do it like this. No? What happened? Something happened? Well, probably need another calculator. One more time. So another one. Okay. All right. So 1,099 times 100 shares. Well, actually 400 shares. So 400 shares times 1,099. That means you will need, listen to this, $439,000 to control 400 shares of Tesla. With this idea right there, with only 280, with almost $1,200, you will be in control of this amount. How about that for leverage? Now, of course, this will be for a week, and you're looking to profit for a week on Tesla. Right now, the second idea will be to play the next expiration, the next week. That will be December 3, and we are going to do the same thing. We're just going to follow the money and see where we have volume and open interest. 1,000, this one, potentially. Let me see what else we have. There's nothing else that interests me. And probably what I want to play at that point, I want to play what we have there. This let's play the 1,400. Either we play the 1,400 or we play the 1,500. This will take us to, I will take also this one. And if Tesla were to drop prices between now and next week, I will revisit this trade and take it to the week after. Repeat, today it's Friday, November 19. If Tesla were to drop during the day and next week we were to have a red day that brings us down to push the price lower to 1,050, then I will look to buy again this one probably by 50% and play it for the next week. Again, same process. Our strike, 1,500 call, December 3. It's about 2 weeks. Right now we're paying, the last price was $195. I suggest you pay no more than $250. All right, no more, $250. So we're going to take 4 contracts. That will be close to $1,000. $1,000 will allow us to have control of 400 shares of Tesla. All right? So we're playing with leverage. But rather than that, buying one share that is going to cost you $1,099, we're going to take this money and we're going to buy 4 contracts with a 2-week expiration from today. All right? So these are the 2 trades that I want to do. Again, recap. Next week, today, when the market opens, I want to pay no more than $280 for the 1,300 call. Expiration next week, November 26. Today as well, I want to load on this one. 1,500 call. Expiration December 3. That is about 2 weeks, and I want to make sure I don't pay more than $2.50. This is how I'm going to play Tesla. Why? Because I know, thanks to the Hawkeye tools, in the short term, this whole thing is bullish. And you want to maximize this bull market. Doesn't matter what you think, what is happening out there. And if you want to know something, I want to share something that I found from our friends at Fidelity. They are with me, and I'm telling you, you want to pay attention. You want to read between the lines. Because according to our friend Timur from Fidelity, Jurien Timur, or I probably gonna say Timer, he's director of global macro at Fidelity. This is just the beginning. And he has a nice thread that I want you to read on the S&P 500, where he's telling that we are about to begin. We're just at 42% on a secular bull market that started in 2009. This is a breather. This is a big breather. Yes, sad. COVID-19 is pretty sad. I understand. One of my friends lost his grandfather. It's sad. But for our fallen, we deserve to continue. We are obligated to continue and make the best of this secular bull market. You don't want to believe me? Then believe someone that is way above most of us. Jurien Timer from Fidelity, director of global macro. When everything's said and done, he is expecting the S&P 500 to be somewhere around 8,000. But he's not the first one. There's this girl, Lisa, probably just added here. Lisa, I can't pronounce correctly her last name. Abramovic, I think it is. She worked with Reynolds strategy, and they think based on the benchmark using junk bonds that the S&P 500, when everything's said and done, will be at 9,000 points. Either way, it's time to play the market the way it is. And the best opportunities will be in the bull side, on the bullish side, on the buying side. So if you want to maximize that, I totally think during this decade, you want to have the best tool. The best tool will give you the edge, and that tool is the Hawkeye Trader package. I thank you for watching. I will come back with more video. I'm just gonna release the beast and bring all the guns that we have with Hawkeye, because you deserve the best. You deserve to make the best out of this secular bull market. Guys, thank you so much for watching, and I'll see you soon.